What's going on, guys? What's going on? What's going on? Happy Monday, everybody. Happy Monday. What's going on, Joshua? How are you? Jay Currency, what's going on? How are you guys? Happy Monday. Get a little pump up music for everyone. It's going to be a nice trading weekend. Getting ready. Studying is essential. Last week, studying was essential. Played out. A lot of good vol towards the end of the week. Should see some good stuff this week as well. What's going on, Jeff? Good morning. Good morning, good afternoon, depending on where you guys are coming in from or dialing in from. Should be a nice session here. Just did about 3-4 hours of studying and analyzing. It should be good. Dr. Squatchman, how we doing? Turbo, what's going on? Long time no chat. How are you? Justin, what's going on? Thanks for joining, guys. Warthog, what's going on? The usuals. Terry, how are you? We are live early. We are getting started. I'm excited for this session. It's going to be a good one. Typically like to get started when we hit about 50 viewers in the first minute or two. Usually give everyone a couple minutes to log in from wherever you're dialing in from. Rajan, how are ya? Happy Monday. Thanks for dialing on. Toronto area, Jeff. Nice. Benny, how are you? Life Choices. What's going on? What's going on? How are you guys? Thanks for dialing in. Just give everyone a couple minutes here and we'll get started. We will get going shortly. Malik, how are you? What's going on? Happy Monday. Thanks for dialing on. Lexi, great to see you. Great. Thanks for dialing on. Get started shortly here. I have some great topics. As I was mentioning, just did about 3-4 hours of research today. So ton of things to cover. Tons of earnings reports. Got some very unusual volume and very unusual positioning within the VIX. Going to talk through that. A famous trader just came about last week in the VIX. Some technical stuff on the indexes and SPY. We've been in a crazy trading range. Pretty boring trading range if you ask me in the last about 2 or 3 months. Looking for a breakout or breakdown there. And then just going to talk about the high beta risk on assets. It's make or break for Cathie Woods this week, in my opinion. A lot of earnings reports. So we're going to see how that goes. Andrew Watkins, how are you? Daniel Fegans, what's going on? Ray John, what's going on? Erico, great. Awesome. Yeah, it's a good thing. Stop some chores for this session. It's going to be good. Get a pen and paper. Going to talk through a ton of technical stuff in terms of levels and sort of game plans over the coming weeks and months for where things are on the charts. As always, as I like to live by the motto, price action dictates market movement. Whether you're bearish, bullish, sidelines, whatever it is, you have to respect the tape. You have to respect the price action. But before we get into it, for the new timers joining on social media, what's going on? I'm Spud from Spud Zone. Feel free to follow me on Webull or StockTwits. Those are the 2 most common areas where I post trade ideas. As keep in mind, I am a retail trader. I trade my own funds and my own money. I do not work for anyone else or any type of other shop. If you'd like to follow my trade ideas, you can. It's fully educational content only. I post the trade ideas on things that I'm looking to trade in and out. I have a specific trade criteria that fit well for me. Obviously, do your own due diligence and risk management on your part. Awesome. As we got that out of the way, topics of coverage for today, guys. 4 topics. 1, usual, we always start with the SPY technicals, the Dow Jones, and the QQQ. Looking at underperformers, overperformers, where we are within this cycle via the technicals. Everything's technicals for me. Second topic we're going to cover today is what I call 50-cent VIX trader. You can Google it. Tons of articles on Bloomberg, Wall Street Journal. This is a famous VIX trader. Came out about 5 years ago. He started, and he came alive last week with a huge bet, which I'm going to talk through around that. And for those that don't know, the VIX is a volatility index. So those people are expecting volatility. Some of the brightest people potentially biggest options traders in the world, betting on volatility. So going to talk through his trade and why his nickname is 50 Cent. We're going to talk through that. Third topic for today, we're going to talk through earnings and chart technicals. Basically ranges where things can go up and down via earnings. We have a ton of high beta names reporting this week. Some examples, Coinbase, Nvidia, some that I can think of. Also a few cyclicals. We got Home Depot, consumer staples. We got a bunch of other stuff coming up this week. A lot of complex in the ARK complex, a lot of earnings in that index coming up, Teladoc Coin, name a few. So we're going to chat through those. And then after earnings, just basically talking through the high beta risk on trade. 2023 has changed from 2022, 2021, and 2020. Each year has had its own specific little niche and trend. And via the first 4 or 5 weeks of trading here, we've seen risk on high beta just explode. Names like Carvana, names like Bed Bath & Beyond, names like Palantir, just names that are up 30, 40, 50, 60, 70, 80, 100%. Tesla up 70, 80% off the lows. So, you have a lot of crazy moves happening in such a short period of time. I don't know if that's particularly healthy for the markets, but as you can see, there's a risk on appetite right now. And I'm going to talk through whether that risk on rally can continue. And we're going to talk through why and how. So those are the 4 topics today, guys. So I'm going to start. This is about to be we're at about 2:07 p.m. Give or take about 40 minutes of your time. And I'll get you guys out of here. But do have a pen and paper. We're going to talk through a lot of levels, specifically on the earnings reports and then the indexes as well when you cover. So first topic today, we're going to chat through the SPY, guys. And I think what's important is I drew some lines, some comparisons here. And this is a daily chart window. Maybe I'll even do weekly. I don't know, weekly it's too big of a time frame. But if we take a look, guys, at the daily chart on the SPY, if we go back to basically early 2021, sort of when we started our bear market cycle off the 470, 465 wick, we've basically been in a downtrend in SPY for about the past 12 to 18 months. And every time we've hit a new sort of bear market rally, we've rejected off that wick. And we've talked through this wick probably for the last 4 to 6 months. We've talked through we've talked through this bear market cycle. But we're getting to a really interesting point where macro traders are confused, technical traders are confused, and there's a huge disconnect right now, Wall Street, Main Street, macro side. You have people having S&P 500 targets of 3,300. You have then outbeat analysts having S&P 500 targets end of the year at 4,500. I mean, these are 20, 30% discrepancies. That's huge moves both ways. But if we go to the technicals right now, non-bias, we're trading above this bear market rally. As I was saying, was about 3 or 4 months ago, back in November, December, we sort of broke out of this zone. And this was the zone I was looking for a potential downtrend retest to the 350s, but we're above this now. So technically, these purple lines show basically the support and resistances I'm seeing within this daily time frame of about 18-month window. We have a really beautiful gap flip up to 425, 430. And that's where I think you're going to get some serious heaviness and some serious overhead supply area, because that's where the S&P 500 would potentially fill that gap. And you're seeing technical algos, technical flows. As you've seen the last 5 to 7 trading sessions, right, guys? It's been pretty impressive. Every dip's been bought up like no other. Like it's almost like the trading day tomorrow is not going to exist because everyone's FOMOing, how do I get in on this rally? And every single dip the last 5 to 7 sessions has been bought up. And you can see that within the tape right here, right? Every bottom wick's been bought up. Every bottom wick's been bought up. Even Friday, we rejected really nicely off the 403s and close in the 407s. It's pretty impressive. So each orange box here is the wick as with this bear market rally has ended. So basically through this 18-month cycle on the S&P 500 index, we have seen new lows, right? New lows. Recover, new lows, right? Recover, new lows, right? And I just, based on the chart and trend, I don't see why this will be any different. I don't see why we can't go here and then see new lows again. A lot of people are saying the bottom's in, the bottom's in. A lot of the bears are saying we're just getting started. If you look, it's pretty incredible. If you've been investing for 20 years, the S&P 500 is only down 12, 14% off all-time highs. I mean, that's incredible. That's incredible for what's gone on in Ukraine, Russia. Interest rates have doubled, tripled over the fastest ever hiking in history. So, I mean, you have so much going on. Inflation at a 70-year high, and yet this index is only down 12 to 14%. Things are, in my opinion, are extremely expensive. Stocks are extremely expensive. Costs of goods are expensive. So I just don't see how this rally is going to be sustainable above this 425, 430 zone in the short term. Obviously, indexes over the past 7 years have gone up between 7 or 10% a year, right? But I still think we're in this bear market downtrend. It's just about timing and when things maybe start to fade and collapse, and earnings haven't been terrible just yet. So I think we're sort of in this cyclical rally here. I think there's some room, as I mentioned, has a 425, 430 gap fill. The key break for me for the downside, guys, for me from a trading perspective, is this 390 pivot point. 390 to 400. If we start to get below this 390, sort of my spidey senses bearish bias will kick in. And this is when I'd like to start buying puts, because I think if we break 390, we can see 370 and 350 quite quickly. And I think in this zone, there's not as much automatic buy pressure, whereas we are here now. I think there'll be a lot more scary panic selling in this area than actually buying in here. So I think this is becoming quite a crowded trade soon, which gives me a more potential opportunity for potentially upsetting a lot of longs and bullish bias in this zone. So as I said, 390 is sort of this pivot point. See this line right here? This is where we cross in. 388, 390. If we get below that, I think this will be your flush zone, and this is where you maybe want to scalp down into. As I said, this is getting a bit tight rating range here. We could get an overpop to the 420s, 430s. That's where I'd be looking to sell this rally, or also maybe positioning. I'll be looking to position long puts 3, 4, 5 months out in this zone here, because I think there's an opportunity to retrace those new lows, those lower lows we saw in October. Things take time, and that's sort of where I'm at. Thesis hasn't changed. Playing both sides of the ball here, guys, bullish and bearish for me. Had a big red January, about $36,000 trading down on January. February, I'm a little green, above even, which is nice so far. Need to continue that throughout the end of the month. But it's been a choppy month as well in February. January, I was pretty short on a lot of things, so got pretty much killed on some high beta stuff early on with some put spreads. But it is what it is. Have to recover, have to respect the tape, right? Price action dictates market movement, and that's sort of where I'm at. So if we want to talk through the Dow Jones, that's been an underperformer for the year / sideways for the year. It seems to me people are sort of selling out of the healthcare, selling out of the safer dividend plays because they're seeing all this risk on appetite, and people are FOMOing saying, wow, things are going up 20, 30, 40, 50% in a week. How do I get involved? I'm in this boring, make 2, 3, 4, 5% every 6 months, 10 months. So I think people are trying to get out of these names and sort of getting into the risk on fade. And then we go to the QQQ. Actually, I don't want to jump in Dow Jones real quick. I want to talk through the Dow Jones because this is an important pivot for me. I want to talk through the weekly. On the Dow Jones, we're actually above bear market consensus, right? So top wick. We're basically similar chart to the S&P 500, but actually, I think there's going to be potentially more downside in the Dow Jones, given we're so close to all-time highs in this index. I actually think if you break below 325 in the Dow Jones, and write this down because I have alerts on, and this is going to be my threshold in the coming months. If we break below 325 in the DIA, I'm going to be looking for all of this opportunity from 325 all the way down to 280 and 300 levels, which is a nice 10-15% move. And I think if we break below here, you're going to see that sort of algo sellout. And this is where I think where things can get some violence. We've seen it drop 4-5% in 2 weeks. It's dropped 10% Dow Jones in 2 weeks. So it's possible. This can move quickly on some panic and volatility and some fear. And these are usually the cheapest ways to play the indexes. These are actually cheaper puts than the S&P 500 itself, because the Dow Jones does not move the Dow Industrial does not move that frequently. And when it does, it moves pretty quickly. And so this is the index level here. This is the gap level I'd be looking at from a technical standpoint. But this pivot point right here, 325, is what I have highlighted as an alert. If we get to this level, I'm going to, as I said, sort of just get biased to the downside and my spidey senses will kick in. And this is where I'm going to be sort of buying puts multi-week, multi-month and trying to take advantage of any panic selling in here. As I said, from an upside perspective, I think we're pretty limited to an upside perspective on the Dow Jones. And that goes back to the risk on appetite. In 2023, everyone's been getting out of the names going into risk on. So I think this is going to be a challenging trade, a challenging investing year for the Dow Jones. This trade worked in 2020-22. Everything got pretty bid up pretty good in this index. As you can see, right, all of 2022 from a COVID standpoint, we've dropped from a COVID lows of 200 all the way to 360s. And obviously, this is a compressed version of the Dow Industrial. I think it's trading at what, like 34,000. So this is like a gap zone I see from above, 34 to 3,600, maybe all retest all-time highs. I see limited upside. I potentially see much more downside opportunity in this index. So keep an eye on that one, guys. QQQ, here's your risk on appetite. Your risk on appetite. This is an index got down to about 32, 33% at the lows in here. Bounced really nicely. There was a lot of buy zone demand here at around 260, 265 handle. And we've recovered nicely. Now, I actually think if the risk on appetite, right, and the Fed says we're stopping for a while, we're pausing. If you start to see this bullish, bearish, bullish, dovish tone, I think QQQ is one in the index where you probably want to hop into, maybe start to swing some. As I said, though, we've seen some super hot CPI, PCI data last week. Fed speakers scaring the market saying we could do 50 instead of 25. So you're now having like a hawkish repricing, kind of repriced in. But I do think there's some upside gap opportunity here. You have a gap in the 310 to 330, which is a nice 10% index move, which I think would really put some pressure on shorts in the high beta names. And that could be some really big opportunity here. Will it reject down here and then go there? I don't know. I could see a pivot down, 270s, retest, maybe an explosion through 300, 330s. Or maybe we go to 330 and then reject to test prior lows. Not sure. So keep an eye on QQQ. It's much more volatile than the SPY, much more volatile than the DIA. So keep an eye on QQQ. But those are your levels. These are my blue horizontal lines. These are your gaps, okay? Same thing, similar bear market. This has been a full bear market trend. Top down wick, top down wick, top down wick, top down wick, but we've recovered over the top down wick, which is quite bullish for a lot of technical traders. So as long as it hovers in here, above here, and not gets into this zone, we're still in a bullish wave. Okay? So that's what I'm going to talk through there. That's about the index coverage, guys, where we are on the charts from a weekly perspective. I like to look at the indexes from a weekly perspective. Bigger time frames, easier to digest, easier to study, easier to predict where things are going up or down. So that's a weekly time frame. If you look at the daily, it's a little bit more choppy. 1 hour charts are a little bit more choppy as well. But as I said, the upside potential and the downside potential, those are the ranges. And anything below a certain range, I automatically flip a switch. Anything above, same thing, flip a switch. I want to then jump into an article this past week. It's at his or her name is known as 50 Cent. And no, 50 Cent, not the rapper, actually 50 Cent via the VIX trader. And so what I mean by that is we're going to talk through a lot of this. So I'm going to talk through a lot of this, right? In terms of the VIX, here is a trader back in 2018, similar trade. He bought 50 cents calls way out of the money, expecting volatility from 2017 to 2018. Netted almost $200 million from that trade. You can Google this, search VIX 50 Cent trader. There's a ton of articles on him or her, and it just came out last week. This is a macro sort of environment trade. And people that play the VIX are sometimes some of the brightest people in the world, expecting volatility, maybe known events coming up. Maybe they feel that there's a floor in. And this trader clearly felt that there was a floor on the VIX, buying it at 1 year lows on the VIX. This is VIX or VXX, Volatility Index. When the VIX starts to spike, premiums in the option markets then fly up and they get much more expensive. because now people are pricing in a very volatile market environment. And given the VIX is so low now, anything under 19, 18 bucks on the VIX is considered really low. It means everyone's very comfortable where they are. And I don't think we're in a comfortable market environment by any means. I think the VIX, in my opinion, is practically broken. I feel like the VIX should be probably trading at between $25 and $30 a share, and it's $25, $30 index. It's not. So we've seen some big size come in. He bought 100,000 contracts, $5 million in a 50 strike of May. So he's betting the VIX could potentially hit 50 from 20 it is now by May. So that's March, April, May. That's a 3-month time frame to potentially double the VIX where it is now. So that's a huge bet to the upside on some potential, I guess, events or panic or some volatility real spike. And as I mentioned, in 2017, 2018, he or she was known as this is sort of the known in this environment. So when they see the 50 cent trade being at 50 cent, 100,000 contracts, a lot of people like to tail him or her. He's done extremely well in the past. So keep an eye, guys. This is a really big trade. So you could start to see us top out around these areas. That's another big area where people don't really understand. A lot of traders don't really understand how the VIX works. But when the VIX gets really low, a lot of shops like to take out positions because that's when a lot of people are comfortable investing. When the VIX gets really high, that's typical when there's a lot of panic and volatility in the markets, when people potentially want to buy when the VIX is super high. So keep an eye on this. I'm going to be watching if any other big call flows come in this week. As I mentioned, this VIX trader, 50 Cent, you guys can Google it. He or she's pretty famous in the macro global sort of time indexes. So keep an eye on that, guys. As I mentioned, netted nearly 200 million profit from a similar trade in 2017, 2018. So this is a big whale. Obviously, you don't know if they know anything. You don't know if volatility starts, when it will start. But this trader is giving themselves a 3-month time frame to potentially for some major volatility in the markets. So I'll just talk through a little bit about the VIX and how that plays within the specific indexes itself. When the volatility tends to go up, there tends to be a lot of volatility in the equity market. Bigger moves, right? So drastic moves up or down via indexes. Like we saw last year, right? SPY moves 4 or 5% in a day on CPI data, up or down. I mean, there was crazy moves. So if that type of volatility starts to come back, put your seatbelt on, put your cap on. It's gonna get crazy. But that's when a lot of people, can make some really serious coin when there's volatility in the markets. As you guys know, I love to trade volatility. When there's big range percentage moves up and down, that's typically when I'm trading at my best, and that's when I love big whipsaw moves. So that's the VIX trader. The next thing I want to discuss on topic number 3 is we're just going to talk through the risk on rally and where we are. As I mentioned, 2023, we've seen the price action. Everyone's been bidding up these high beta names: Coinbase, Palantir, SoundHound AI. We've seen this AI theme, AI itself, C3 AI, go from like 15 to 30 within a few weeks. So we've seen these drastic moves, right? SI, a crypto bank name, we've seen some 13G filing. So we've seen a lot of the big high beta tech names, sort of that med cap, sort of 4 billion, 10 billion, 15 billion market cap sweet spot, have some serious move from the hedge fund sort of allocation perspective, right? And I think this rally will potentially continue throughout the entire year. It probably will be volatile, but the fact that it's gapped up so fast, so quickly in just 3 to 5 weeks of trading sessions shows me that that's going to be a year-on potential rally, risk-on appetite. And what I mean by that is that if the Fed pauses, that's a green light for risk-on appetite for a while, right? We've seen even Bitcoin, right, rally from like 15, 16 grand. It's early at 24 grand already, 24,000 a Bitcoin. So, we've seen a lot of these, high beta stuff get bid up. And I think if the Fed continues to be hawkish and raising rates, more than the market's expecting, 0.25 bips. If you see, they're including more and they go over the Fed funds rates of 5% or 6%, then you're going to see that trade get absolutely crucified. And it's probably that trade will get decimated. But if we do any type of pause or any type of green light, people are going to be racing back into growth, and it's going to be quick. And by that time, the bigger move will be done because people are already positioning now. So that could be an area to keep focus on. This is the high beta tech stuff. So these are all your names, right, guys? Down, 50, 60, 70, 80, 90%, from 300 to 10, like a Peloton or Carvana from 300 to 5. Like a lot of these like meme stocks or like a lot of this high risk, I call it, appetite. Those are the names that could be on watch if we see the Fed start to pause. So look for those, compile a list. I've made some lists in the past, solid companies that potentially are down so much in market value. Those are names that could potentially be, potentially good plays. Like a ChargePoint, CHPT, the global leader in, charging EVs. That name's down 50, 60, 70%. So, there's a lot of names that have just been thrown out. Look at the ARK complex, ARKK. That's basically your high beta risk name. And Kathy Wood, she's got quite a busy week coming up, which we're going to jump into next. If I'm going too fast, I'll try and slow down a little bit for the earnings and the earnings and the technicals reports that we go through next. But I wanted to run through all of this stuff with you guys first. So we ran through the Spider, the S&P 500. We did the Dow Jones, right? We did some technicals. We did the QQQ. We talked through this big VIX better, betting on major volatility soon. That's something to keep in the back pocket, something to think about as you're making trades. And then we talked through this high risk on rally where people just don't care what the company does. They don't care about anything. They just want to be involved. How do I get money to work? And that's sort of the environment I feel like we're in so far. And then the fourth topic I want to cover, which is going to be probably 15, 20 minutes, guys, maybe even longer, is I'm going to run through specific names and the charts and where things are and where I'm looking at potential zones for this week on earnings. As we've seen, earnings have been really volatile, right? Palantir, calls ran 900% from before earnings to 2 days after earnings. That's in a crazy move. Airbnb, another name that popped a $70 billion market cap, ran 25% in like 2 days. So there's up to the upside, right? Then you have downside names, right? You have a lot of downside names that have gotten crushed 10, 20, 30% on earnings. So there's a lot of volatility in earnings again, and I think it's here to stay. And this week, I think, is going to really set the tone for like the ARK complex, the high beta people. So I'm going to jump into some earnings. We're going to start with a consumer staple name, a cyclical name, Home Depot. Everyone probably knows Home Depot. Quite an interesting trading range here. I'm going to walk through this. This is the weekly chart, okay? From November to now, so that's 11, 12, 1, 2, basically 4 months of trading, Home Depot has done nothing. It has been in a trading range of 310 to 330, and it hasn't done anything in that range. So 5 to 7% moves within that whole time period. Nothing. I'm looking for this earnings report. And this is tomorrow pre-market, actually, so there's no way to position prior to it, up or down. But I'm looking for a potential move lower to the 270s, 280s, 290s, or a potential breakout above 330 into the 340s, 350s. So I'm thinking after this earnings report, we'll get some clear direction and maybe be able to trade out of this range. And keep in mind, Home Depot is a stock that doesn't really move a lot, as you can see here. So if there's an overshoot up or down and earnings are really good or earnings are really bad, there's an opportunity to get in and scalp some on the bit. And what I mean by that is contracts are pretty cheap. Premiums are pretty cheap here. So playing puts, playing calls to the upside could be a nice lucrative trade from a short-term perspective. So I'm going to be watching this earnings report tomorrow morning. It also gives an idea of where other cyclical names can go. So you saw John Deere Friday. Actually, that name popped about 7%, but then you've seen CAT struggle recently. So you've seen other industrial names, other cyclicals, consumer staple names struggle as well. This has been a struggling trade this year. So from that perspective, people kind of want out of these names, because 2022 was so lucrative for them in these names. Everyone was bidding them up. So if you start to get bad earnings here, it'll be kind of like a double punch where people will say, why am I in these slow dividend names, slow consumer or cyclical names if I can jump into growth, take more of a risk and maybe make 20, 30%. So you might start to see the double punch here, bad earnings plus people want out. And that could maybe cause some friction to maybe Home Depot and other names to start to trend downwards. You have a double bottom on Home Depot at 260, 270 zones, 270 zones. So if we break below 310, I'm going to be looking to maybe play some puts down into the 280 zones, and that's how I'll scalp that range down. If we break above 330 with fierce and we go to 340s, 350s, then maybe I'll play some upside. But if we hit 330 on earnings and it just can't break above 330 for a day or two, I'm going to hop back in puts again because that means we're just in this trading range and there's no buy zone demand. So that's Home Depot. Earnings are tomorrow morning. So please feel free to write those levels down. 310 to 330 is your levels. Above, I'm looking for maybe some short upside. Below, if it can't break above 330, if it breaks below 310 and holds there, I think you have some great downside opportunity at 270s, 280s for the reasons I gave. That's Home Depot HD. Second one. So those are your levels there, guys. Coinbase, technical lies. Let's look at the weekly chart. I'm actually going to go to the daily. Coinbase is just a name that is extremely volatile. Let's just set it at that. It's been doing like 4, 6, 7% moves daily. Up, down, up, down, up, down. It's like a freaking roller coaster. Huge short interest name here via the crypto side of things. The Sam Bankman-Fried thing, the Binance, other cryptos going bankrupt, lawsuits. There's just so much going on in this industry. A lot of folks have just said, get me out. And you've seen that within the price action back in October, November, where Coinbase basically dropped from 74 to 31 in like 30 days. So now we've seen it start to get bid up from the 30s all the way. It actually hit 87 a share, which is quite crazy. So we have earnings. This is a name I will not be touching for earnings. Premiums are pretty crazy on this name, and I can't imagine what they would be for an earnings report. They're already like 200% per contract from an IV spread perspective. I'm guessing it'll probably be 250, 300 premiums percentage-wise. This is a name you just don't want to touch probably from an options perspective, but from an equity, shorting or going long via shares can be a nice play here depending on the earnings and the trend. But as I said, this is a name that's been getting bid up in the 40s and 50s. So if you do get some downside of the 40s, 50s, it's a name that might be a potential dip buy opportunity. It's a name that also sits within the ARK complex within Cathie Wood's been buying. So that's a Coinbase. Teladoc, another name in the ARK complex. This name has had a huge trading range recently, from $23 a share up to $33. So that's a $10 move, which is basically like a 40, 50% spread move over a 30-day radius. So this is a name that I'm expecting a big move on earnings. And by big move, I'm probably anticipating, and I have not looked at the option flow yet. This name is Wednesday after close, they have earnings. But I'm guessing this will be another name that option bettors are probably expecting a 14% spread. So this is a name that if we get above this 33 level, plenty of upside to the 37s, 40 zones. Anything below 30, 28, you might be able to retest those 23, 24 lows. Keep in mind, this is a high risk beta name, and it moves quickly as well. This also sits within the ARK complex. And as we see with the ARK complex, we've seen some gap fills to 45 and up to 52. So there's a lot of opportunities. If this high beta rally continues, ARK, ARKK, is a way you can potentially play it. The calls are much cheaper. It moves much slower. It's not as whipsaw. Right? It's an index, basically. It's the Cathie Wood. I call it the high beta Cathie Wood index. If the rally starts to fade hard, another index you can go long or short on, just shares. As I said, it doesn't move as crazy. 2-3% it moves a day, if that. So it's much easier to sort of play off of, less risky than just playing a single name in that complex, like a Tesla or a Coin or a Teladoc, right? Or a Zoom or whatever it may be, right? The big one, everyone wants to talk about Nvidia. Let's talk about Nvidia, okay? Nvidia bottomed out back in October when it went from 188, and that was one of the craziest short calls I think we've ever had within the Spud Zone. Double top short at 188. We had some puts. A lot of the team had some puts and shorts in the 180 zones, 190 zones. And this thing was a 20-day fader down to the 112 from 188. What a move. I mean, what a move. A 30-40% wick down in a 30-day radius. Unbelievable move. We had a bottom out phase going on. We then sort of had a head and shoulders. And we broke through the 175 resistance with some fierce. We actually rejected beautifully off the double top here in the 188s. right? And then we sort of compiled the higher low, right? Let me put in a line here. And I'm just going up before earnings. Earnings are actually Wednesday after hours, but I want to talk through what the stock has done into earnings, because that's very important to know whether what we can do, right? So bottomed out, it then held a higher low here at 140. Then it broke out of the 170, 188s. And then we just started to gap up. And this, to me, the last 7 trading sessions, in my opinion, we're now hitting this big resistance back here at 220s. There's a reason why this stock has not broke 230. No, it's not magical. No, it's not politics. No, it's not. It's strictly technical analysis. This is where the stock created its first huge downtrend double wick movement. 1 wick, 2 wick, 3 wick movement within a daily time frame, within a 7-day radius, and then we started to fade to new lows. The major selling started at around 280 a share at Nvidia back in early of 2022 when semiconductors started to get underwater. We then had a consolidation phase, and then we went to new lows. So this is a really important level for Nvidia. And why I say that, it's been on such a rally and such a tear recently from 140 to 230 that I think this could be an opportunity to take some chips off the table. And why I say that is it's getting very crowded. Everyone's chasing it right now from the AI theme. Everyone's saying, how do I get in? The current PE from a macro perspective is 50 PE right now. This name is trading at a 50 PE in this environment, 50 PE. Keep in mind, a Tesla, based on last earnings report, it's only trading at around a 25. So you're paying double the price, double the earnings on a Nvidia name than you would be on a Tesla name at current levels today. So that's quite impressive. A 50 PE this name is holding. So we have earnings Wednesday after hours, and I'm not too bullish on it. They've revised down the last couple of quarters. They've gotten actually pretty beat up. The last quarter was just okay, and this was trading at a 150 a share. So you're telling me since then, a 150 a share, we've rallied 25% higher on nothing really, no news. And the China thing and Taiwan thing has gotten even more skeptical, but yet this has rallied even 25, 30% higher. So I'm actually in the camp of there's more of a surprise to the downside, I think, on after earnings. Keep in mind the premiums are pretty stoked up. I like the move to potentially here, guys, 190. I liking a potential head and shoulders consolidation rejection down the 190 over the coming weeks. I really like this 190 spot. I think it needs to, from a health perspective, it may need to test this 190. Now, keep in mind, if the buyers continue to bid this up, maybe it will finally break out at 230, but it's got rejected off 230 1 time, 2 time, 3 time, almost 4 times this name is rejected in the past 10 days off 230. This is crucial here for Nvidia and all chip makers. So this is a big earnings report for the sector, or Wednesday after hours. And as I said, it's becoming quite a crowded trade. It trades some of the most volume on all of the market. It trades billions and billions and billions of liquidity hourly and daily. I mean, this is a name that just trades so much volume. So 190 is that pivot point. I think that's really a key healthy pullback here. How I may look to play earnings is maybe playing very small put spreads. Maybe the March 17th 190 strike for a healthy potential 5 or 10% pullback. That's how I'll look to potentially play Nvidia. If I play earnings, it's going to be that 190 spot for March. I will never play the weeklies because they could just make this a sideways move for all week this week before maybe going down next week or going up next week. So if earnings are really bad, I could take advantage of the opportunity for March. If earnings are so-so and the stock doesn't move, I could get out maybe even or small loss, maybe even small gain on those March strikes because the IV volatility won't be crazy. So that's how I'll be looking to potentially play this Nvidia name. As I said, I think it's an awesome company. It's been a great move. I personally just think it's getting a little heavy via the price action and technicals in this zone. And you can see it back in 2022, 2021. These are key levels, 230 here. And this is now used to be a support at 230, is now being a very big wall. So 230 is your key break for upside, and not just going through it on a 1 day. Having the hold 230 would be really crucial. Keep in mind, if you were to move above 230, let's say we went above 230, there is a gap fill up to the 260 zone. So if this gets really bidded up and pushed higher, this is a big gap fill from 230 to 260. anything around 260, 270, you're starting to pay 55, 60, 65, 70 PE for a high beta chip name that's extremely volatile. I would start to scale in with puts around this level if it ever got back up to the 270s. And I'd be buying probably 200 puts with a 6-month window because I think there's a much higher chance for downtrend in here than an uptrend. So that's how I'm looking to play Nvidia. I think it's a great long-term name. If I can get shares down back in the 140s, where that base is sort of being built, if the name ever gets back to the 120s, 140s, this would be probably a great name you'd want to pick up for the 5, 10, 15-year rollout play. I like that. I like that name down in there. But right here, I just think it's a little too crowded to the upside. So a lot of people have been asking me about that one. There's your technical analysis. I hope that's helpful. There's your levels. It wants to break below this 210. I think there's a 190, a nice 190 gap fill right here that could be filled this week or next. Unless we break above 230. So keep an eye. Nvidia is going to have some big volatility, I think, in the next 2 weeks. That's Nvidia. So we're doing quite well, guys. Then we get to Thursday morning earnings. And just keep in mind, I have them leveled for everybody. Let me quickly show everyone. I had a screenshot. That's weird. Okay, so anyway, Nvidia's here, right? We walked through this. Teladoc as well. We walked through that. Then we're going to talk through Alibaba, Chinese name, China mega cap consumer staple name. I think it's important from a Baba perspective, right? This is a name that is being bid up by sort of private funds, hedge funds, people that are more risk on. And I get so cheap. The market over there in China has been just brutalized. I mean, just decimated from 300 down to $100, went all the way down to 50. Baba was trading at like a 7p at one time. You keep in mind, Amazon's trading at a 50p plus, yet you have Baba, which is arguably one of the biggest names in the world, trading at an 8p, but it's growing at 20 to 25% year over year growth clip. I mean, that's just talk about free discounts. That just shows you how bearish the sentiments got over in China. So this is a name I think that if you get any big dips on earnings or if earnings are just okay and if somehow fades, I think this is a name you'd probably want to try the dip on. It does have a technical gap fill down to the 86, 88 zones. This has been a very key support for Baba. So I think if this name gets to 88, this would be a great, I think, name to grab at 88 and maybe play the upside up to 120 by the end of year. This is a name that could upside surprise, and you have gap fills to 120 and 130 trading range. And I wouldn't even be surprised if this could get above 130 and even go up to the 140s, 50s, 60s, because I still think it's a cheap name for what they do. China's also coming back online, that economy. You also have, obviously, the big political risk here, and which is why I think the stock is trading where it is. You have the China-U.S. tensions, the Russia tensions. You have all of that going on, which is why it's probably underperformed the market over the last 5 years. But this is a name that could present some good volatility to the upside if earnings are great. So keep an eye on that. Keep an eye on this. Is Alibaba. 88's been a very key support. You have 110 and 120 for your upside targets if this starts to move higher. Keep in mind, this is a name that trades a lot of liquidity, a lot of call put volume, a lot of share volume. It's one of those big mega teps for China that trades very well every day. A name I'm actually looking at that's sort of been a great performer over the last 2 decades, Domino's Pizza. Everyone probably knows it. Everyone's had some Domino's, some Cinesticks, Buffalo Kickers in their day, I'm sure. Some, the crusted pizza with the cheese. That's always really good. Domino's. So Domino's Pizza, that's been a performer the last 2 decades. But we're starting to get on the weekly chart. If you check out the weekly here, we're starting to get into what I call a zone that does not look favorable for bulls. It's underperformed as of the last 6 to 12 months. We've been bidded up from 330s to 400s. It's faded. We've seen new lows. It's faded. We're in this sort of chop zone. We could see new lows on Domino's down to the 280 level here on the weekly. Competition's going up. You saw Chipotle, their costs are freaking flying. Chipotle's been down 6 to 8% from my earnings review and my earnings thesis on how food prices are going to affect that margin. And what happened to Chipotle? It's down 6 or 8% from that. Food prices are just flying. You got eggs up 400%. You have costs for beef, costs. So I think this potentially could weigh on Domino's. They do have a nice dividend. It's been just a steady grinder from all the way from back in 2012. This was $25 a share to 560. So this has been an absolute monster winner for every portfolio. If there's a sense of slowing down in the business, I think this will be a name that sort of gets sold off fast. And the reason I think that is because people are going to say, you know what? It's been an awesome run for the last 10, 15 years. I want out. I'm going to book some profits. And the chart itself is showing some sort of underperformance. So this is a name, if the premiums are cheap for Domino's, I may play 2-3 weeks out for some in the money puts. So I'm looking at maybe, or close to out of the money, like a 350 put strike for 2 weeks out. Maybe I might dabble into earnings in case earnings are bad. McDonald's was okay. Starbucks was pretty okay. As I said, though, right, the shift's changing from get me out of dividend to high growth. And this has been sort of that dividend slow mover. So as I said, if earnings are bad and people want out of these names, it could be a double punch combo similar to the Home Depot trade. So I'm going to be looking at potentially Domino's levels of 350, 320, and then under 320, 300. So those are my three levels on earnings, 350, 320, 300. And as I mentioned, these are names that don't really move fast on earnings like that. But over the coming weeks, if it starts to trickle down 1 or 2% a day, those are sort of the levels that I'd be targeting lower. From an upside, if they totally surprise to the upside, a key break for me here would be 370 to potentially play a 380, 400 play. And then 410 would sort of be your finalized target if they really beat earnings. So that's Domino's. I'm really excited for that one this week because I think that one actually could potentially surprise people up or down and basically how it's been trading, right? You have to look at the price action, right? I always teach new students, new members of mine, price action dictates markets movement. It doesn't matter what you think or she thinks or a hedge fund or a mutual fund or an index manager. It doesn't matter what they think. It's what the tape is saying that's going on at that current price level. That current demand and supply. The markets are about demand and supply zones, what the price of someone is willing to pay. That is all that the market is flowed and created by, right? So it doesn't matter if you're bearish or bullish. Does the tape show that price action within the given equity or index or sentiment itself, right? So this has been underperforming the last 4 or 5 months. It could have more downside before finally potentially bottoming. That is Domino's. Planet Fitness is very interesting. This is a gym name, a gym, a wellness. This name has done really well over the years. Recently, it's actually performed well too. Now, why has it performed well? It's a pretty genius business model. Planet Fitness does about $10 a month for a membership to go to a gym. You got Equinox, $250 a month. You got Lifetime Fitness. You got all these other Crunch Time, $100, $200 a membership per month. Planet Fitness is $10 a month. So you get a lot of those folks that say, I'm just going to have the gym membership. Maybe I go once or twice a month. It's still worth it, right? $10 is nothing at the end of the day for a lot of people. Why not just be subscribed to this gym? So this is a name that has been a steady growth mover over the coming, since its IPO back at, 10, 11, 12 bucks. It's been a beast. It's starting to come into some resistance here around the 85 strike. It could be a potential recessionary play if people say, you know what, I'm done with my expensive gym. What's a cheap gym I can go to? Planet Fitness. It's probably the cheapest / most organized, well-run gym out there. So this could be a potential recessionary hedge. And as you can see in the price action, right, the tape itself, it's been a strong performer throughout the last 6 to 8 months. Look at this crazy drop and then just fully recovered and has traded very well over the last months. I mean, look at this timeline. Let's look at the chart here. Bing. I mean, look at this trend line. Beautiful trading range from October to October. So this is like a 4-year trading range. It's been in this range of 56 to 85. So it's been nice. I think we're going to have a move higher, maybe all-time highs, or if we get below this 855, we could see lower lows to the 30s, 40s. But my argument's probably to the upside. The way the price action, the way people have been buying this up, it looks like we could see, 60s, 70s, 80s, 100s again. So keep an eye on PLNT. That earnings report, I believe, is when we see on my cheat sheet here. That earnings report, I believe, is Thursday, after hours as well. So keep an eye. Planet Fitness. Planet Fitness, the gym, as many probably know. The last name for the end of this session is one of the names that I find most compelling. Very, very interesting. We have a scanner in-house within Spud Zone. We use Tradeitics. Awesome. They have some awesome scanner and bots, some automated data bots. And this name has been popping up on the insiders bots, which basically means insider buying and insider selling. And throughout this past week, we have seen over $220 million sold from insiders in this name. Earnings report, it looks like it's a Europe company. I know nothing about it, but I'm just looking at the technicals alone. You have a one top back in 2022 in January where this hit 58 and rejected down to the 40s. Again, rejected at 58. And now we're here again at 58s, and we're seeing insiders pick up the sell button. It's had an unbelievable run. This name has earnings Thursday. Is it after hours? I know, as I said, I know nothing about this company, but we have the insider bot flow, and the sentiment is very negative in terms of the insider selling. And that could just be scheduled selling. They can only sell around earnings reports and, when they can timely from insiders. So, that could just be that, or maybe they just think it's a good time to get out. It's been a great run. But I'm going to maybe potentially take some lotto put ideas at maybe the 55 or 50 strike. But I'll be taking it 3, 4, 5 weeks out because this is a name that you see doesn't really move much. Seems very slow. So maybe like a 5% downside move I'd target on this one if earnings are just come in okay or bad. So 55 for March could be a nice little position here. So I'm going to be looking at the tape maybe on Wednesday to maybe hop in some puts. And it's just a total hunch. They could beat and go up 3 or 4%. So that's why I've just played it out 2 or 3 weeks with very tiny size if I play it. But as I said, I just saw a ton of insider selling over the last few days, and I've seen it come up multiple times on my scanner. So I'm going to be looking at a potential, just some lotto puts idea, multi-week out, very, very small, in case there is a downwards move in the stock. The levels here would be about 55 a share, followed by 50, and then 45, 46. So this would be a gap level down. As I said, we are at a triple top at all-time highs as well. So it's a little scary trying to buy puts at an all-time high. If this breaks out above 58, there's no resistance. So it's sort of gap up here. So let's keep an eye on this name. This is LKQ. I think it's a Europe name. I believe I haven't looked too much into it, just to the flows itself. But that does it for the earnings this week. I will go back to, it's not an action-packed earning week, but I think it's kind of an important one because there's a lot of these like Unity, Etsy, Nvidia, Teladoc, Block, Carvana, Wish, Intuit, Beyond Meat, Nikola. Like there's a lot of the Wayfair. There's a lot of these super high PE names. And we've seen these names fly recently, 30, 40, 50, 60%. And I think it's kind of that like, okay, guys, we're at like that push comes to shove, like, are you going to perform or not? And I think that's where investors are with a lot of these names. So I think we're going to see big 10, 20% moves up or down. It's going to create some great short opportunities. It's going to create some great long opportunities. So let's keep an eye. I think this is going to be a great potential trading week. But I'm probably going to look to play the volatility instead of trying to guess the volatility on these names, just because the premiums are pretty high. So if you want to try and maybe play some puts or calls, I think Dominos is a great way to play a low beta play. Home Depot, even a Walmart. Those are names I think you want to look at maybe potentially playing even in Nvidia, but multi-week out. I think your Square is going to have some big premiums. Love Square as a company, one of my favorite companies out there. I wish I can get it in the 30s or 50s. It's just been a beast. It's been in the 70s, 80s for a while. If the markets ever crash and go down, this is a name I'd love to be picking up shares in the 40s, 50s. I love the long-term mission of this one. Being from New York City, going around, it's just everyone's swiping credit cards. Block is a huge winner of that. The coffee shops, the bakeries, the pizza places. It's just all like a lot of that technology is being run by Square and Block. So, I love that name, but I think it's a little too pricey in this environment. I would love to get it cheaper if I could. I always am watching the price action on that one. Teladoc, that's a high beta health tech name. They're changing the landscape for health tech. So keep an eye on that name. That name could be a one-off a dip as well. But yeah, guys, so that's sort of it for the week. We went through indexes. We went through 50 Cent, which is the famous VIX trader. So that name is he's betting $5 million that there's going to be major volatility in the markets in the coming weeks to months. So positioning could start to be aligned for the downside. Slowly, if you start to see some puts get picked up, I'd be more cautious if you're long, or maybe starting to trim or scale out, or maybe at least trying to hedge. If you're super bullish on the market, hedging's never a bad idea. And we also covered, today we covered the high beta stuff and the Fed. And then we covered all these earnings. So I think it's going to be a great earnings week, guys. I'm looking for volatility. I'm hoping this session was pretty helpful. Since we finished a tad early, I do have like 5 or 7 minutes for Q&A if you want to do it. We have like 100 folks on the line. But keep in mind, if you're loving this stuff, if you're interested in looking or learning more about the community, my tech team will post something within the Discord, within the YouTube about our Discord info. You can obviously join. We have thousands of traders trading every day. We try not to miss anything in the markets. It's it's always quite interesting. So, I'll end on that. Let's have a great trading week. I'll put the watch list together later, but appreciate everyone jumping on. I hope this session was helpful. I love to run through the technicals. I love to share my knowledge. I love to see you guys ask great questions, and it's always great to get a bunch of like-minded and awesome traders together. So awesome stuff, guys. I see a question. What scanners you guys use? We use the platform. We've done a lot of research. The platform we ended up choosing for our analytics and data is Tradetics. I think you say it right, Tradetics. My tech team will probably pronounce that more clearly. Tradetics, I did Tradaytics. We found them to be the best over other competitors and providers. They have some great data flows, really easy to read via diagrams and charts, pie charts, similarities, and all that stuff. We have sweep bots options. We have insider selling, buying. So we have a ton of stuff that we use on there. Hopefully that's really helpful. Let's have a great trading week, guys. Good luck trading. Obviously, always trade with an edge. Keep your risk and everything tight. That's how I like to trade. Obviously, all this stuff is for educational and technical and content use. So obviously, trade at your own risk. I'm not a financial advisor. I'm just a retail trader sharing trade ideas and via the technicals and how I like to trade over the years. So hopefully it's really helpful. If you guys want to join, you could check out the link below to join the Discord, or you can continue following on Webull or StockTwits, wherever you guys are at. Cheers, guys. Enjoy the rest of your Monday. Enjoy the day off. Get well rested. I'll be fully prepared and ready to trade this week. Let's hope it's another great trading week. Study. Tons of opportunity out there, guys. Cheers and take care.